Right, in today's Auto Watch, Stellantis is releasing their third quarter profits. The automaker is facing another setback as revenues fell 27% in comparison to last year. Global shipments of new vehicles also dropped by 20% as the company looks to cut costs.
With each passing day, Stellantis finds itself sinking deeper in the murky waters of declining sales and the reality of an imminent bankruptcy slowly creeping in. Over time, some of its most popular brands have been recording shocking slumps in sales, such that the automaker has even contemplated ending their production. But now, a new development has caught the industry unaware and just shocked everybody. It's now official that Stellantis could be forced to sell some of its struggling brands after a potential buyer from China just made an irresistible offer. Imagine some of the most popular American brands under Chinese ownership. Yeah, that could be a reality soon. So, who is this Chinese buyer that's interested in benefiting from Stellantis' problems? Let's get into it. To understand why Stellantis might be forced to sell some brands in its portfolio, we need to look at the current situation of the automaker. As of 2024, the company's shares have plummeted 41%, while its net revenue for the first half of the year was $93.69 billion, this being a 14% drop from the same period in 2023. Its net profit has also declined by 48% within the same period, totaling $6.19 billion. Total car sales have also declined by a staggering 20% between 2023 and 2024. Let's take a closer look at some of the most affected car brands, starting with Jeep, which has recorded a 6% drop in sales in the same period, while Ram Truck, Dodge, and Chrysler have seen sales drop by 19%, 43%, and 47% respectively. Things seem to be so bad at Stellantis that it even lowered its financial outlook for the year.
The carmaker also said operating profit margin would be hit by lower than expected sales in the second half of this year.
Needless to say, the move to slash annual forecast has not really gone well among the investors, as they perceive this to be a sign of worse things to come. However, one might argue that's not a Stellantis only problem. Isn't the entire automotive industry experiencing a slump? The answer to that is, it's actually Stellantis that's experiencing such massive declines in sales. Take Ford, for example, one of the biggest rivals of Stellantis in the United States. This company recorded a 10% increase in sales, while another major rival in the American market, General Motors, recorded an 18% increase. Clearly, something's up at Stellantis. With all this going on and the threat of bankruptcy getting bigger by the day, we could be seeing major changes at Stellantis. And no, we're not talking about management changes, we're talking about ownership changes. With Dodge, Ram, and Jeep struggling and Stellantis seemingly unable to save them from total collapse, someone might have sensed desperation by the automaker and tabled a deal that could be too good to resist. However, the potential buyer is not your average American entrepreneur. Instead, they're located thousands of miles away, in China. It's now becoming increasingly clear that the three car brands that have carried the American legacy for years could be soon under Chinese ownership.
They built a lot of expensive products, too expensive in a market where people are looking for less expensive vehicles. They made some mistakes in terms of the type of products they put out. And I think, frankly, one of the biggest concerns.
Now, as it turns out, BYD, the Chinese automotive company, is actually the party that has reportedly tabled a proposal to purchase Dodge, Ram, and Chrysler brands from Stellantis. Yes, this is the same company that has been dubbed the Tesla killer for its aggressive manufacturing and lower pricing of electric vehicles, making many customers shift allegiance in its favor. All this started in August when unconfirmed reports stated that BYD was looking to buy some of these brands as a means of penetrating the American market. This has also been reiterated by an expert in the industry that was quoted saying, "For Chinese companies like BYD, purchasing a legacy brand would make entering the US market a lot easier than launching a new brand in an already crowded market." The thing is, Stellantis chief executive Carlos Tavares has only contributed toward adding more traction to these reports.
Of the brands, but there is no taboo. If they are not able to monetize the value that they represent, then decisions will come. For the time being, all of our brands, with no exception, are profitable.
Tavares made it clear that the automaker was open to make critical decisions concerning any brand that they deem not to be performing well, and that could include the three main culprits in its portfolio: Jeep, Ram, and Dodge. With the likes of Chrysler considered to be among the weakest links in the Stellantis chain, there's an increased likelihood that BYD would target it, not necessarily to breathe life into it, but to use it as a mere means to an end, to get into the lucrative American market. And it gets even more interesting. There have been reports of executives from BYD that have been pictured visiting Stellantis dealer lots in Detroit and in Auburn Hills. These executives are said to have been accompanied by people from Stellantis. Some might say that this evidence does not hold water. However, it's clear that if BYD has put in a proposal, it would also want to have a better understanding of the whole supply chain to get to understand what really goes on at Stellantis. There have been reports that these executives have also been spotted at Windsor and Warren, further adding to the weight that there could be more than meets the eye between BYD and Stellantis. There's more evidence that China's BYD could be the new owner of some of the most iconic American brands under Stellantis. But before we reveal all of that, why not take a minute and subscribe to the channel and turn on the notification button? You surely don't want to miss out on any update that we post.
Well, there is, first of all, you are right to say that the automakers are under pressure. The auto industry is in a turmoil, and as you are looking at the results, everybody is going in the same direction.
In addition to that, reports have emerged that BYD has been scouting for sites for a new production facility in Mexico, right outside the United States' door. Already, the Chinese automaker is said to have settled on Guadalajara as a frontrunner. By making this move, BYD would be looking to benefit from trade benefits under the United States-Mexico-Canada agreement. Also, there's a likelihood that the plant in Mexico could be used to produce the brands that BYD will buy from Stellantis at a lower production cost due to cheaper labor costs in Mexico. In the most recent move that has further raised eyebrows and only confirmed that there could be something cooking between BYD and Stellantis, the Chinese automaker has hired Maria Grazia Davino from Stellantis to help drive international expansion. Of course, Davino comes with a lot of experience on how Stellantis operates and will be a great addition to BYD's team as it pushes to have this deal done. Her experience could play a significant role during the transition process and could be the difference between success and collapse of the new venture under BYD's umbrella. However, there's a caveat in this whole story. In the midst of all this, there's a potential wildcard that could change the whole trajectory, and that wildcard is in the form of the heir of the founder of Chrysler. The heir, Frank B. Rhodes, recently wrote an open letter to Stellantis' chief executive and proposed acquiring the Chrysler and Dodge brands in a move that would see them revert back to American ownership. Now, if Rhodes has the right amount of money to make Stellantis sell these brands, that would mean that BYD misses out. This would compel the Chinese automaker to get back to the drawing board and come up with a new strategy. This brings us to the next question. Suppose the proposal to purchase these struggling brands went through, what issues will it be inheriting? Well, there are a handful of them. It goes without saying the deal will see BYD inherit some of the most iconic brands ever manufactured in the United States. However, apart from that, the automaker will have to grapple with a damaged reputation that some of these brands have developed in the last few years, from quality issues that have seen millions of them recalled to excess inventory that has been sitting idle in the dealer lots for months. In addition to that, BYD will be inheriting a myriad of legal cases with the United Auto Workers that were triggered after thousands of workers were laid off following the closure of plants that manufacture these brands in the United States. The automaker will also most likely not escape heightened government scrutiny, especially due to its Chinese roots. At a time like this, when the United States and China are flexing muscles in a trade war, BYD could just be one of those casualties that could be hurt by the standoff between the two global economic powerhouses. One thing remains clear. If the proposal by BYD to purchase Dodge, Ram, and Chrysler is successful, it will be a historic move that will change the auto industry forever.